more verbal intervention, but it's only a matter of time before we get to 150, 151.
It seems that way at the moment. You know, if US yields, even though they came off slightly yesterday, if they continue to push higher in the coming days, and we have US PCE data next week, which is supposed to uptick, so that'll add support to yields. So on that basis, you'd have to think risk is certainly skewed towards 150 or potentially 151 being hit. Of course, if it hits 150, here's an intervention. The catch is when I've said, look, there's no line drawn in the sand. There's no specific level. And of course, the market wants to test that out. It has said interventions more based on excessive moves. And if it grinds its way towards 150, the question is, well, is that excessive if it's a grind move, particularly if it's based on fundamentals? So the market's certainly wary of it, but certainly risks are biased towards further dollar-yen strength.
David, with the sterling, but coming back, are people beginning to think that perhaps Mr. Hunt can sort things out after, of course, just scrapping Liz Truss's plans on tax and fiscal policy effectively?
Yeah, it's certainly a positive for sterling. There's no question about that, because obviously there was lots of worry about the spending and the budget deficit. So that's a positive. But if you notice, it's still actually below its October high of 114.95. So there's still some worry there. And you have to think there's a reason why, because even with the scrapping of a lot of the budget, there's still Bloomberg Economics thinks there's a budget hole of about 36 billion, because some of it is still going through, and there's the energy cap as well. So they'll be looking at his remarks on October 31st when he releases more details of the budget to see how this gap will be filled. And if it's not going to be filled, then that just adds to the budget deficit, which compounds the current account deficit. Two negatives, unfortunately, don't make a positive for sterling. So while you'd have to expect some downward pressure on sterling resuming, not that it will retest 103.50 against the dollar, but certainly you'd expect it to grind its way back towards potentially 110, if not lower.
So what may stop that spiral down for the pound?
At the moment, if you're honest, there's not a lot of good news at the moment. I mean, you've got UK inflation coming out tomorrow. It's supposed to go 10%. If the BOE is aggressive on the hiking, which a lot of people think it's been behind the curve, then that could certainly help. And obviously, if inflation came in a bit lower than expected, that could slightly help. But between that, the inflation data, consumer confidence supposed to come to a record low. There's worries about a recession. So all around, unfortunately, the state of the UK economy is still very dire, even with this change in the budget plans. So it needs something dramatic, really, to improve, particularly if the dollar strength just continues, which is expected to.